On August the 28th, Russian officials shared some positive economic news. Industrial production in July rose by 3.3%, which was higher than June's 2.7% increase. Since the beginning of 2024, industrial output has grown by 4.8%, which is faster than last year's growth of 3.1% during the same time. The latest data also shows that Russia's GDP grew by 4.6% in the first half of 2024, a big improvement from the 1.8% growth in the first half of 2023. These figures are looking good, and Russia's Deputy Economy Minister, Polina Krychkova, is feeling optimistic. She said that given these strong numbers, the economic growth for the entire year of 2024 might be even better than what was initially predicted back in April. You might be thinking, perhaps Russia is outperforming the US and claiming a spot as one of the top global economies. However, it is not all smooth sailing. The Russian central bank has raised concerns that the economy might be overheating. They pointed to persistent labor shortages, rapid wage increases, and high inflation as clear indicators. To tackle these issues, the central bank plans to continue a tight monetary policy to curb inflation. Real wage statistics also show a positive trend, with a 6.2% increase in June, building on an 8.8% rise in the previous month. Average wages went up by 15.3% compared to last year. A big part of this wage increase is due to higher payments to contract soldiers in Ukraine, which has set a new standard for wages across the country. In the first half of the year, the Russian economy saw significant wage growth, with real wages up by 99.4% and nominal wages by 18.1% from the same period in 2023. This jump is mainly due to serious labor shortages in fast-growing sectors where workers are demanding higher pay to align with similar roles elsewhere. Despite these wage increases, unemployment has stayed very low, holding steady at about 2.4% of the workforce, which means about 1.9 million people are unemployed. The Russian central bank has pointed out some challenges in the economy, especially related to recent trends. One key area to watch in Russia's GDP, which is a major measure of economic health. Over the past year, the GDP has consistently grown each month. For example, starting from mid-2023, the GDP increased by about 5.1% and stayed above 5% for several months. Though there was a slight dip toward the year's end, the growth resumed, reaching a peak of 7.7% early in the following year, before stabilizing at around 4.2% to 4.5% in the months after. The most recent data shows that the GDP grew by 3.4% over the past year, surpassing the International Monetary Fund's forecast of 3.2% for 2024. This indicates that the Russian economy is performing better than many expected. However, analyzing GDP effectively requires looking beyond the immediate yearly figures to consider long-term trends. Russia's GDP has seen ups and downs over the years. In 2018, the economy grew by 2.8%, but the growth slowed to 2.2% in 2019 due to a global economic slowdown. In 2020, the COVID-19 pandemic hit, causing Russia's GDP to drop by 2.7%. However, in 2021, the economy bounced back with a 5.9% increase. The year 2022 brought challenges like economic sanctions tied to the Ukraine conflict, which led to a GDP decrease of 1.2%. By 2023, as the country adjusted to new economic conditions, there was a growth of 3.6% in GDP. On the other hand, the US economy has generally maintained steady growth. In 2018, the GDP went up by 3%, and despite a slight dip of 2.5% in 2019, it remained positive. The pandemic also affected the US in 2020, with a decrease of 2.2% in GDP. Nevertheless, 2021 marked a strong recovery with a 5.8% increase, and the following years saw a stable growth of 1.9% in 2022 and 2.5% in 2023. While a quick glance at 2023 shows Russia's GDP growth surpassing that of the US, it's important to view these figures in the context of the economic fluctuations each country has experienced over the years. Russia's figures show significant volatility with sharp declines and recoveries, whereas the US has shown a more stable pattern of growth. Over a span of 6 years, the economic performance of Russia and the US can be tracked through changes in their GDP. Starting from a baseline year where each country's economic output is represented as 100, the subsequent year's growth or contraction is measured from this point. For Russia, the economy grew by 2.8% in 2018, followed by a further increase of 2.2% in 2019, indicating a steady rise in economic output. By the end of 2019, the economy was significantly larger than it was at the baseline. However, the impact of the COVID-19 pandemic in 2020 reversed some of these gains, causing the economy to contract by 3.5%. Despite this setback, a sharp recovery occurred in 2021 with a 5.9% growth. The recent years have been challenging for Russia's economy, especially when compared to global trends, primarily due to sanctions impacting its GDP. In 2022, Russia's GDP fell by 1.2%, which reduced its economic index to 106.1. However, in 2023, there was a rebound with GDP growing by 3.6% and raising the index to 109.5. In contrast, the US saw more consistent growth over the same period. Starting with a 3% growth in 2018, the US index climbed to 103. By the end of 2019, further growth of 2.5% had pushed the index to 105.6. Although the COVID-19 pandemic caused a temporary setback in 2020 with a 2.2% decrease, the index quickly recovered to 103.3. The subsequent years saw significant recoveries. A 5.8% increase in 2021 and a 1.9% rise in 2022, bringing the index to 111.3. By the end of 2023, a 2.5% increase had elevated the US index to 114.1. Comparing these indices reveals that from 2017 to 2023, the US economy expanded by 14.1 percentage points, whereas Russia's growth was only 9.9 percentage points. This indicates that Russia is approximately 4.2% behind the US in terms of economic growth over this period. But viewing annual GDP growth figures in isolation can be misleading. Although Russia's economy grew by 3.6% in 2023, this must be viewed in the context of the prior year's decline. The net growth would be lower when considering the recovery needed from previous losses. In 2022, the ideal scenario would have been a growth of around 2%, but instead there was a decline resulting in a negative swing of 3.2%. Over the past decade, the exchange rate between the US dollar and the Russian ruble has seen significant fluctuations. Currently, the ruble is trading at about 91 to $1, which is one of the lowest levels observed in the last 10 years. The depreciation has been particularly notable since the onset of geopolitical tensions following Russia's invasion of Ukraine. Right after the invasion, the ruble's value plummeted dramatically, reaching as low as 125 to 130 to $1. Another steep decline occurred in the summer of 2023 when the exchange rate surpassed the 100 rubles per dollar mark. These drops in value have been among the worst since the observation period began. In response to these low values, Putin expressed his dissatisfaction and directed the Russian central bank to take corrective actions. The central bank implemented several restrictions on how companies and individuals could handle rubles, aiming to stabilize or improve the currency value. These measures had some effect as the exchange rate adjusted back to around 90 to $1. However, despite these interventions, the long-term view shows that the ruble's value remains considerably lower than it was at most points over the decade. This persistent weakness against the dollar is important, even though some might argue that Russia does not prioritize its economic relationships with the dollar or conduct significant transactions in it. The exchange rate between the Chinese yuan and the Russian ruble has weakened significantly, especially over the past decade. The yuan is becoming increasingly important to Russia as more exports to China and now India are being paid in yuan, leading to a considerable stock of the Chinese currency by Russia. The exchange rate currently is around 13 rubles to 1 Chinese yuan, which is among the lowest levels seen in the last 10 years, excluding specific crisis periods. This significantly impacts Russia's international purchasing power, making it more expensive for Russia to buy goods and services globally. To put this into perspective, consider how the ruble's value against the US dollar has affected Russia's economy. While Russia's GDP grew by 9.9 percentage points from 2017 to 2023, this growth does not take into account the depreciating ruble. For example, in 2018, $1 was worth 60 rubles, but by 2019, it rose to 65 rubles. This depreciation means that goods priced in dollars become more expensive in rubles over time. Adjusting Russia's GDP growth for the ruble's depreciation shows a significant reduction in its actual economic strength. In 2020, Russia faced significant economic challenges. The GDP fell due to the impacts of the pandemic, reducing the economic index to 101.4. Additionally, the ruble depreciated by 7.7%, averaging 70 to $1, which, when adjusted for the ruble's depreciation, brought the net economic index down to 94.1. This represented a nearly 6% decline from 2017 due to both the failing GDP and the depreciating ruble. In 2021, while Russia's GDP recovered, increasing the index to 107.4, the ruble's value continued to drop, falling by another 7.1% to 75 to $1. Adjusting the index for this continued depreciation left it at just over 100, indicating that over 4 years, the real economic growth was minimal. 2022 presented a unique scenario. Despite further GDP decline due to its sanctions, the ruble's value improved significantly by 13.3%, averaging 65 rubles to $1. This adjustment raised the economic index to 122.4, 22.4% higher than in 2017. However, the improvement in the ruble's value was short-lived. The substantial support from the Russian central bank to prop up the ruble was costly and not sustainable. By 2023, the ruble fell further to 85 to $1, a decline of almost 31%. Despite GDP's growing by 3.6% that year, the adjusted economic index fell to 84. This means that in real terms, Russia's international purchasing power is significantly less than it was in 2017, despite nominal GDP growth. This highlights the issue that even with GDP growth, the declining value of the ruble has reduced Russia's ability to purchase internationally, making imports more expensive and reducing overall economic strength. Recent data from June 2024 reveals a 6.2% increase in real wages in Russia, which might appear positive at first glance. However, this is significantly overshadowed by an 88.6% inflation rate during the same period, resulting in a net effective wage increase of just 14.8%. This high inflation triggers a challenging cycle. As wages rise, so does spending, which in turn pushes prices even higher. Russia also faces issues with its labor market. The unemployment rate has dropped significantly from 3% in July 2023 to 2.4% in July 2024. Typically, low unemployment is good, but in Russia's case, it shows a scarcity of available workers to fill job vacancies. This problem is a result of demographic challenges such as low birth rate, a high death rate, and increased immigration due to conflict. These factors strain the economy, showing signs that it is overheating and struggling to maintain stability.